In trading, you can be wrong about the overall market direction and yet still make money. Here's exactly how you can do that. Okay guys, so this is the chart from USD JPY from a couple of weeks ago. Now, at the time, I was viewing price from this bullish perspective, right? We were in this clear uptrend, and my thought process at the time was that price would at least likely buy up into these previous highs to the left, where it had created these equal highs. What I then saw was that price started to retrace, so I was viewing this as a sweep of some previous liquidity into this area of demand. So this is when I started to look at the lower time frames for a potential buying opportunity. And once I saw price break to the upside on the M5 just here, this is when I started to look for the buying opportunities, simply looking to buy from this area of imbalance down here. So I set my limit just here, stops below the low, and then I was mechanically targeting a 1 to 3. Now, this is the real key, right? Because even though if we play on price, eventually price does continue to the downside and my overall market direction was completely wrong. However, because I was only targeting this small risk to reward, I still managed to capitalize on this 3% move and made 3% despite the fact that the overall market direction was wrong, by simply understanding this concept of liquidity and that price is likely going to give some sort of reaction after previous lows are swept, right? So this means that sometimes we can be completely wrong about the overall higher time frame direction and yet still make money by understanding this concept of liquidity.